Many people will associate Absolute software with compliance software, filling in tax returns, completion of accounts, etc. But we also have tools to help you help your clients and help you do your jobs a little bit more straightforwardly. Many people will know about our company car planner, for example. People will know about our planner, which helps you understand exactly how much tax you're going to end up paying. And as part of the preparation of that, most people, I think, are now aware that Tim spotted that there was one particular topic that kept coming up, kept being a problem area, and that was to do with chargeable event gains. And chargeable event gains is something that I think most of us know. The way we do a chargeable event gain computation is we type the numbers into a computer, it gives us a vaguely plausible answer, and we just move on with whatever we were doing and assume it's okay. But Tim, the discovery you made was that actually everybody has been getting chargeable event gains wrong for a number of years.
Yes, and very briefly, the background is that the revenue use an Excel spreadsheet to do the personal tax calculation routine. We know that they've had problems with that for 16-17, just in terms of allocating personal allowances and so on. But when developing my own tax calculator last summer, asked to put chargeable event gains in, I discovered that the revenues calculator have adopted, as far as I can tell, since self-assessment came in, a simplified approach to top slicing relief on chargeable event gains. And when programming it for my calculator, of course, I went back to basics and looked at the legislation in the Income Tax Trade and Other Income Act, and that legislation is simply not being followed in every case. And the revenue system hasn't been updated to take account of subsequent changes in legislation, most notably, but not exclusively, the introduction of a restriction on the personal allowance if you go over 100,000 of income. And let me give you straight away a simple example. Suppose that a taxpayer has other income of £25,000, and it could be pension income, rent, whatever it might be. And on top of that, they have a chargeable event gain on encashment or partial encashment of a life policy, and that gain is 150,000, and that gain has arisen over a 10-year term. So we've got 25,000 of other income and a £150,000 chargeable event, and the chargeable event certificate will have been issued by the life company. Now, as you can tell, the 25 plus the 150 takes us in total to income, because the chargeable event gain is savings income, it takes us to 175,000, and so you would not qualify for any personal allowance. And HMRC and I agree on the tax calculation before top slicing. But if we then look at the top slicing calculation, we are told to work out tax on the basis that the gain is limited to one slice, just 15,000 here, a tenth of the 150. And if you were to add that to the 25,000, you're down at 40,000, and you would, in each year in which you had a total of 40,000, be entitled to the full personal allowance. And I maintain that that's the way that the legislation is intended and drafted to operate, but the revenue simply haven't updated their calculator to do that. Now, what's the difference in tax? Well, on the figures I've given you, the revenue would calculate the total tax as 21,000, whereas I would calculate the total tax liability as 5,000, because I would give significantly more top slicing relief, and my calculator has incorporated the revenue calculation within it so that we can see at a glance what the difference is. And in that particular case, the difference is £16,000. And if I am right, and I maintain, and lots of other people agree with me, that I am right, we're still waiting for the revenue to concede it, that taxpayer will have been overcharged by 16,000. Now, on my analysis, the £16,000 arises because of the way in which the personal allowance should, in my view, be reinstated for the calculation that Section 535 ITOIA requires us to do. But let me look at some other figures, because it's by no means obvious or clear cut, and my calculator simply does what the legislation says, work it out on this basis, work it out on that basis, take this, take that, multiply this by that, do all of that, which the revenue do not do.
As you're preparing that, if I just remind people that actually the reason that the shortcut used to work, and we used to be quite happy with it, was because, of course, there was no abatement of personal allowance. There were no 5,000 starting savings rate bands or personal savings allowances. It is the interaction of all of those issues that prevents that simplified calculation of, which is where the name comes from as well, isn't it? It's just looking at that top slice, that difference at the end between the two calculations.
Yes.
That's why it's so different. And that's why this planner is such a useful thing to have. So yeah, sorry, you were going to show some numbers.
The second example, the same figures of 25,000 other income, a chargeable event gain of 150,000, but this time after 20 years. Now, in that case, the revenue and I differ by only £2,000. And if it's a 10-year term, the revenue, say the tax is 21,000, but whereas I say it's 5. If it's a 20-year term, I still say it's 5,000 net. The revenue say 7. So they are giving almost as much top slicing. The difference of £2,000 there is, from what you've just mentioned, the way in which the revenue disregard the effects of the more recently introduced savings rate band and personal savings allowances. But there are further complications, and I cannot tell, just from looking at the figures straight away, whether it's going to make a difference or not. And in some cases, in fact, the revenue are too generous, but only by £100. And again, that's tied in with the way they do the personal savings allowance. But in other cases, they are very ungenerous indeed. And let me give another example. 40,000 of other income and a chargeable event gain of 300,000 for a policy that's run for 20 years. According to HMRC, you're going to have to pay 69,600 in tax for that year. But by my calculation, you should only be paying 21,600, a difference of £48,000. And this is very serious. I can explain how I get to such a high difference. It's because if you take the personal allowance of 11,500 for 17-18, multiply that by 20 years, and you get 230,000. And then if you take 20% of 230,000, 20 being 40 less 20, but actually higher rate 45, and so. But even at 20%, we're looking at £46,000.
Yeah.
So that's the way we can get to that sort of figure. Now, there will be taxpayers whose returns have been filed, some quite a long time ago, where they will have overpaid, if I am right.
And we are looking back a number of years on this.
Well, certainly when did that restriction on the personal allowance come in?
2009.
Yeah,
I think, yeah.
And so we're going back that far, but there could be. And it gets even more complicated because if, and this is the last example I'll do in this demonstration, if I were to put in £43,000 of dividend income only, and a chargeable event gain of 57,000. Let's do it over 10 years. Now, 43 plus 57 equals
100.
So without top slicing relief, we've got total income of 100,000. Is there a restriction on the personal allowance?
No, you're just inside.
No. So the major effect in the calculation isn't going to arise here. And yet, I look at my calculation and I reckon you're entitled to top slicing relief of 11,200. Wow. Now, when I saw that a couple of weeks ago, I thought, can't be right. And then I look in the workings, and what this calculator does is show you the overall result. It identifies the revenue calculation, because I've used the revenues calculator to do that. It shows the difference, but the workings will then show how, step by step, I've gone through the legislation in ITOIA to come up with what I think is the correct figure. And when I looked at my workings on this one, it all comes back to the fundamental problem that the revenue have in calculating tax these days, and that is the allocation of allowances in the way most favourable to the taxpayer. Because when we go into the workings, I can see that when we include just one slice, as we're instructed to, and work out tax on that basis and apply Section 23, allocating personal allowances in the way most favourable to the taxpayer, my calculator allocates about half of the personal allowance to the dividends and the other half to the slice. And that then reduces the tax on the slice and works it through in a way that gives top slicing relief, in this case of over 11,000.
It really is a hugely complicated area, and that's why Tim has written a planner which helps you work through these numbers and explain to the client what is going on, and also be able to make sure that the calculation and the figures that you are submitting are correct. It also obviously works hand in hand, as Tim was just discussing there, with the standard planner, if you like, to be able to look at exactly how we use the personal allowance most efficiently for a particular client. The information scrolling along the bottom of the screen at the moment explains exactly how we price this, exactly what it will cost you. And if you would like any further information, there's also the website there to help you access further information and also be able to talk to somebody in our office to get full details. If you have any questions, do contact us through that website, and we will see you again on an explanation of this nature. But for now, bye-bye.